Sure.
So, good morning, everyone. Once again, welcome to Strike webinar. I'm Chavan. I'll be the host, and the speaker for today is Mr. Jay Vora, who's a market analyst at Indiacharts. He'll be giving a presentation and he'll be giving his analysis on rollover data based on rollover data today. Those who have still not used the Strike, please go to web.strike.money. It works on laptop and desktop, not on the mobile platform. Do sign up and start using the tool. You'll get a 7 days free trial. It's an analytical tool for both traders and investors where we have covered the fundamental data, the technicals, the futures, options, everything you ask for. The the URL is web.strike.money.
सामने
Okay.
वाला नहीं दिख रहा क्या म्यूट करूं
So request everyone to please stay muted. Yeah. So Jay, you can present your analysis. You can kickstart the webinar. So the format is very simple. He'll give a presentation at the beginning, and in the end, we'll be opening up for the Q&A where you can unmute yourself and ask questions.
Sure.
And yeah. So Jay.
Yeah, Chavan, just one request, if you can put the link of web.strike.money. People are messaging me for the same. Yeah, in the chat box, basically. Zoom
Yes,
chat.
I put it. Yeah. Web.strike.money. You can just show them. You can share your screen and show them, Jay.
Yeah.
Thank you.
So yeah, basically you can just type web.strike.money. Okay. And if you have not signed up, so basically, this first, the initial page is free. So whenever you go to some other module, that's where it will ask you to sign up. And once you sign up, you'll get a 7-day free trial. Okay. So with that, we'll start today's webinar of rollover analysis. So firstly, thanks for joining.
Jay, sorry for interrupting. If you can show them where is the screen for rollover, how did you?
Yeah. I'm coming to all those part. So firstly, thanks for joining today's webinar. This was an extended weekend. So, despite of that, many of y'all are here. So that kind of also shows your dedication towards market, and that's heartening to see. So in today's video, we'll be basically looking at the rollover analysis, and this is nothing but the extension of what we had learned, in the last webinar, which was of OI analysis. Okay, the only difference in rollover analysis is that whatever chart we will see is expiry to expiry chart, and the open interest that we see is the open interest of starting expiry of 1 month to the next month, like how the behavior has been, that what the chart will help us understand. So it is more like a zoomed out version, or you can say the monthly chart sort of thing for the OI analysis. Okay, the main thing what rollover analysis does is that it will work as a scanner. So I'll show you how to read the data and how to think about it. So the way we will approach this webinar is that firstly we will discuss what this screen is all about, and what is the utility of this. The second one would be obviously the analysis part, and thirdly, once you have scanned out the stocks, how do you actually interpret it? Okay, and how does the data actually make sense? So that is what we'll try to understand. So firstly, to go towards the rollover module, you will have to press the second button or hover over there, go to futures and go to rollover. So I'll just briefly explain you how we have built the screen. So in this rollover, there are 3 screens, that is daily, expiry and early positioning. So in this webinar, we'll be largely explaining the early positioning part. Okay, but what the rollover daily analysis does is that it helps you to gauge how the rollover is happening day on day basis. Largely, it is more very helpful in the last 4 to 5 days, because that's where you get to know how the rollovers are happening. Is the rollover picking up or no? The second tab is the rollover expiry. So that is nothing but we get to know like how the rollover has been, what is the percentage of rollover when compared to its previous history, and so on, right? So this is the expiry screen. Now most of the people are very used to looking at this screen, okay, and trying to understand how the rollover has been, and what can be the expectation. But today what we learn about is the early positioning, okay, and once you learn this, it will give you a whole new perspective altogether, okay, and it will probably help you to understand even better, because earlier even I used to look at this data, okay, but over a period of time I realized that the starting open interest, okay, which is this open interest at the start of the beginning of every new expiry, that is far more useful to analyze, rather than just solely looking at how the rollover has been as compared to its previous 3 to 6 months average. Okay, so in this screen, in the early positioning screen, basically what we try and capture is what is the starting open interest. I mean, what is the open interest at the start of new expiry? Start of new expiry meaning if the January expiry is done, okay, then this figure is nothing but the start of the open interest of the new expiry, that is Feb month. Okay, now over here basically we have an option whether you want to see combined OI or you want to see just the next month expiry, which is the Feb month. Okay, now usually I have this habit of looking at combined OI, because combined OI is nothing but adding up all the possible expiries and getting the open interest. So sometimes it is very rare though, but in this case, like Feb may have say this much open interest, right? But Feb plus March may have a lot bigger open interest, that could be material to know. So that is why usually I try and see the combined OI, but again it's a preference which people may have, because I have seen many people using just the Feb month future open interest. So nothing wrong with that, but it's just a matter of preference. So over here, what we actually show in the screen is the open interest trend for the last 12 months. Okay, so that sort of helps you to give a perspective like what is the starting open interest usually the stock has. Okay, so say for example in this case, say HDFC Bank. So in March it used to be around 6 crore shares, 6.5, 7 crore, 6.85, 7.4, 8.6. So after, if you see July, okay, the trend started increasing. It became 8.6, then 10.5 crore, then 13.2 crore, 15 crore, 15 crore, 15 crore. Then again in Jan, it dropped to 9.7 crore, but Feb has again come back to 18.8 crore. So we'll understand what is the significance of that, but just to briefly make you understand what is there in the screen. So we capture the open interest at the start of new expiry. Okay, and what you see over here is nothing but month on month OI change, which means that what is the OI change in the Feb month as compared to the Jan month. Okay, and that is what we plotted as a percentage, like what is the percentage change. And the other thing that we also look at is that what was the opening price of the stock in the previous expiry, and if the stock has ended the current expiry at say X level, then what is the difference that we have seen. Okay, so broadly what we try and understand is that if the open interest is up, okay, if the open interest is up and the price is up, so it is nothing but a long built up. So wait, I actually have a pic for that, which we had also showed it in the last webinar. Okay, so basically if the price is rising higher and the open interest is rising higher, it is nothing but a long built up, and it is usually bullish for the stock. Okay, I mean that is what it means. But over here, it can slightly mean something different. So we'll come to this. But firstly, it is very important to understand this part, because this is the basic of what we are trying to build upon. Okay, if the price is going up and the open interest is going down, then it means that it is short covering, which again has a bullish implication on the price action. Okay, if the price is going down and the open interest is going up, it is a short built up and it has a bearish implication of price on the price action. Okay, if the price is going down and the open interest is going down, it means that long unwinding is happening, and again it has a bearish implication on the price. So please make sure to understand this part, because this will be very crucial in understanding the later part of the webinar. Okay, so once again, price up, open interest up, it is a long built up and it is bullish. If the price is up, open interest is down, it means that it is short covering and it again has a bullish implication on the price action. If the price is down, open interest is up, okay, it is a short built up and it is actually bearish from the price angle, okay, from the price action perspective. And if the prices are lower and the open interest is lower, then it is long unwinding and it has bearish implications on the price. Okay, so with that, when we look at here, okay, so the reason why we have added opening price and month on month change is to know whether it is a long built up or a short built up. Now, purposely we have not given the interpretation part, the reason being that if it is a long built up or a short built up, not necessarily next expiry will be a continuation of that. Okay, and that is why we did not really wanted to give an interpretation part, because each stock will be very differently poised at every given point of time in the new expiry. Okay, so some might end up continuing the trend, but some might also lead to a significant trend reversal. Okay, so people who would have attended the last webinar, they would know that if the open interest is at its peak, in the entire history that it had, and say it is somewhere over here, that means that the prevailing trend is very strong and most likely a trend reversal could be around the corner. So say if this open interest was accompanied by prices going higher, then it means that long built up was there and a long unwinding is likely, which will push the open interest eventually lower, and the prices may also come down in the coming expiry. Okay, so like I said, this can also be a contra indicator as well. So it is very important to understand what the trend of the stock is. Okay, to basically understand if there is going to be a continuation of prevailing trend, or there can be a trend reversal, right? So so that is the sole reason why we have not given the interpretation. Now, many people may have the habit of looking in this tabular sort of format, where you just see the figures and you try to interpret it. But there are people like me who love to see the chart. Okay, And that is why we have built this chart as well. So what you see at the top is the price action based on every expiry. Okay, because when you look at this point, say this is 25th ka expiry, right? The earlier was 28th expiry, I mean 28th December expiry. So before that was 30th November expiry. So the chart that you see is expiry to expiry. Okay, the percentage change that you will see over here is nothing but what is the percentage change in terms of price action. So in this case, HDFC Bank has gone down by 16% or so. And what you see at the bottom is again open interest at the start of new expiry. Okay, so whatever we have basically in this table, okay, that is being plotted. So in the table we are showing just a 12-month history, but over here we actually have almost 11-12 years of data that we have plotted it. Okay, so I hope this is the basic part which is understood by all. So I am purposely going a bit slow because there might be many people who might have missed the earlier webinar and they are joining us today. So yeah, so just once again, what we are seeing over here is nothing but the open interest at the start of new expiry. Okay, and what we see over here is month on month change of the open interest. What you see over here was the opening price at the start of new expiry, which means that over here the December month expiry is complete, and at the start of January expiry, this was the rate of HDFC Bank. Okay, and it ended the January month expiry, and in fact it started the February month expiry at this price. So we calculate the month on month price change. Okay, and this sort of throws you what is the return the stock has given on month on, I mean, in one particular expiry. So now basically the way the screen works is that the higher the open interest change, okay, to the prior expiry, it could be very significant. The reason being that it tells you that something very big is happening in the stock, and that is why people are taking interest in this stock. Okay, so as I mentioned just a while back that HDFC Bank, the open interest used to be 6.5 crore, 7 crore, 6.8 crore, 7.39 crore. Now you can only see that from the July month, the open interest started increasing. Okay, so just to give you a brief sense, if you go on the chart and if we see from the July month, okay, which is from this, so that is where we have seen first the decline, then a pullback, okay, and then once again a decline. And usually what I try to do is that I try to understand what is the broader trend all about, which means that if the price has gone down and the open interest has surged, that means that over here short was there. Okay, then eventually what ended up happening was that there was a short covering rally, due to which there was a pullback in the open interest. Okay, which means that this rally that you had seen was mainly due to short covering. Now, if you all remember in the earlier class that I mean in the earlier webinar that I had mentioned that whenever the rollover starts coming down, okay, that means that people are cutting the position of what it had built earlier. Like supposingly if over here it was a short built up, then all over here that is happening is a short covering rally. If this was a long built up, okay, if this was a long built up, then this would end up being long unwinding. Okay, So in case of HDFC, what was happening was that there was a short built up that we had seen, due to which there was a surge in open interest. Then this pullback led to a short covering rally. Okay. Now, whenever a short covering rally happens, or basically whenever, for that matter, open interest comes down, it means that obviously the short covering rally is happening, and now people are more or less a bit neutral about it. Okay. And then in whichever direction the prices goes, and again the open interest starts building, that means that is the area where the people are now positioning themselves. So in case of HDFC Bank, once again it has seen a decline and there has been a surge of open interest. Now, if you all remember, in the last session, I had mentioned that whenever you get such high open interest, okay, it typically means that if the open interest starts coming down, then that means a trend reversal or a bigger pullback is likely to happen, right? But one may also remember that I had mentioned that not to preempt till the time we actually see a price reversal happening, right? The reason why I say that is because you don't know which is the highest point, right? I probably thought this was the highest point, but this expiry, again, it has gone up. So it may so happen that it may again pull back a bit and then again go up. So that sort of thing can happen, and especially when the stock is entering into a down phase, okay? That's where most of the time you will see an abnormally high open interest. And I will actually show you with examples to so that you will be able to relate what I'm trying to say. But essentially, what this screen helps us to understand is that, say in case of Navin Fluorine, okay, earlier 3 lakh used to be the open interest, 3 lakh, 4 lakh, 5 lakh, 5 lakh, 6 lakh. Then over here in August, there was a huge, 100% change in open interest. And then again, it came back towards its normal level, or little bit normalized, because it was now around 7 lakh. And over here, everywhere it was around 7 lakh, and this time around it is 13 lakh. Okay. And that too has happened with prices going down. So over here, it basically means that there is a short built up that is happening in the stock. Now you have to figure out, okay, whether this short built up is going to continue or no. Now you would say that, if I only have to figure out, then what is the use of, seeing the screen? But this can, we actually do have a screen that will help you to understand the trends as well. And that is where, if we see the Rohit setup, which is what typically, we try to follow in our system. So over here, what you will see is the RMI, which is a proprietary indicator. So this works basically as a momentum indicator, a little faster and smoother than the MACD that we see. Okay, basically it gives a more quicker signal. The other thing that we have is Dow trend, which means that if it is forming a lower high, lower low, then the system will tell you that it is in a downtrend. And then over here, basically, if it's in red, which means that it is trading below the 20 SMA. And if if again this figure is red, the second one, it tells you that it is below the 40 exponential average of any time frame. Okay. So now, like I said, so let us look at how the trend for Navin Fluorine is, right? So over here, we have seen RMI buy, but the Dow trend, is still not telling us that the trend has changed, right? On the weekly chart, if you see, there is actually a fresh sell crossover that we have seen. And over here, the trend has been down as well ever since it has broken this low. If you see the monthly chart, so over here as well, the trend has been down since last 3 to 4 months or so. Okay. And actually what we are seeing right now is a break of the blue line. So blue line is nothing but the 40-month exponential average, right? So what it is telling you is that in the past, 1 or 2 years, broadly, this had been the range, right? And now, given that the stock is actually breaking this average, which it had not done ever since 2014. And in fact, so over here, if we see more data, I think this stock used to be was in action since 2008 or so. Yeah. So over here, you see that in basically in 2014, the stock had given a bullish crossover. Okay. And over here, basically, you had seen an RMI crossover as well. And since then, it was in an uptrend. In this entire consolidation, which it saw on RMI, and when it gave a bullish crossover, it was above the 40-day exponential average, right? And it is only now that, this seems to be breaking down, and this 40-month exponential seems to be breaking down. So this could be meaningful, right? Which means that what we are seeing over here, okay, that is a huge surge in open interest, 92. So this may not really be a contra signal, which means that open interest is way too high, and now there will be a short covering rally, and that will pull the stock higher. So for that to happen, okay, probably the stock will need to close above, say, it needs to give a short term reversal, and only then you will probably see some short covering sort of rally. Now, say on the daily chart, if I go, if the averages are broken out on the upside, okay, that's where then the crossover that we are seeing, that may sort of build up, and that's where eventually above the moving averages is where the momentum will start actually picking up, and that's where probably the people who are shorting may get a bit panicked, and then they will go for a short covering rally. But I request you not to draw on the screen, whoever is drawing, please. So basically, till the time we don't really see a trend reversal in Navin Fluorine, especially on the daily or on the weekly chart, okay, where over here, as you can see, that once this low was broken, which means that the higher top higher bottom structure was negated, since then it has come down, and that the system has told it, right? So what we actually try to do is that we see what the higher time frame trend is, okay, and then we can try and time on the lower time frame, that could be either daily or hourly. Okay, hourly could sometimes be too noisy, but people who would be interested in very short term, they may probably use hourly, but I have this habit of using daily most of the time, because it sort of helps you to give a good directional move. So that is how you can actually analyze. So over here, while I was going through the data last night, I could see many interesting stuff. So say, for example, Concor was the one. Now so yes, Concor, Nalco. Okay, this would be worth explaining. And don't worry, if you'll have any doubts, we will have a 1 hour Q&A session. You can probably get all those doubts clarified around that time. Right now, I'll just try to explain, how I look at things, and later on we'll address all your questions. Okay. Now, if you see Concor, okay, it was probably in the month of March 23 or so, that's where the open interest was around 98 lakh, or, you can say around 1 crore. Then by August it had come down to, say 38 lakhs or so, and now again, the open interest is building up, right? So we would like to see the chart of that, and for that you simply click over here and you see the chart. And what you will probably understand is that, see, at this point the open interest was nearly very high, which was, I think, somewhere around March 23 or so. So wait, let me see the date. So yeah, this was Feb 23. The next was March 23, where there was this 96 and 82, so 82 lakh sort of open interest. And what we eventually saw was that, see, this rise, I mean, this decline was led by huge surge in open interest, correct? Effectively, what happened later on was that this rally was based on the short covering, which people basically shorted over here, and they went for covering their short, and that triggered the up move. But the important part over here is that, see, what we see over here is basically month-on-month activity, correct? It is also very important to understand what is happening on the lower time frame. So for that, what I do is that I go to futures, I go to OI interpretation module. Okay. So basically, I am actually at this module only. So once you open the OI interpretation module, I type Concor, and then I just try to find, what is really happening on a lower time frame, I mean day on day basis. Okay. If you want a detailed information, basically if you want to see the grid as well, like, day on day what is happening. So you can also go type Concor at the top, click futures, and you will get the data over here as well. Like, long build up is happening, short build up is happening. But, typically I don't see day on day basis, but what I try to do is that I try to see the trend. Okay. So when we actually look at the trend, okay, this was the point where there was lowest open interest, which means that people are sort of neutral over here, and wherever now the open interest starts building, that's where a trend is likely to pick up. Okay. Now this example is little interesting because, what I eventually found out while looking at the chart was that there is sort of a tug of war that is going on between bulls and the bears. And I will also show you an example where a similar sort of thing was happening earlier and what eventually happened. So see, I will just mark over here. So this was the point where the open interest was very low, and basically the rally that we saw over here, okay, basically from here, the rally that we saw was based on the short covering. Okay. And if, sorry, is the screen visible now? Chavan, you're there?
Yes, your screen is visible, Jay.
Okay. It showed me that your screen sharing is paused. So yeah. So anyways, so when we look at a slightly, zoomed out version, and that's what you will realize, that while this decline was happening, this was on the back of, shorts that were building in. Eventually what happened was that this, the stocks saw a rally and there was a decline in open interest, right? And if you all remember what we had seen, what we had learned last time, I'll just quickly brief you through that as well, is that there are phases in the market, right? This becomes phase 1, say, this becomes phase 2, phase 3, and phase 4, and then it is like a repetition of this phase, which means that if there is a long built up, eventually long unwinding will happen. Now long build up will happen due to there could be a lot of euphoria around that stock. Okay. At some point of time, people will realize that, this has gone way too much and they would want to cover their position. And once they cover their position, there will be many people, who might be thinking that abhi trend change ho gaya hai and it has gone up a lot and it has a further room to go down because it has shot up a lot and it could be maybe it has shot up beyond its fundamental. And that's where, people will like to go short. And after building shorts, typically there will be a point where a lot of shorts will build up and then eventually they will go for a short covering. Okay. And that's how this cycle sort of continues. So if you all remember, even in the last session, I had mentioned your whole job is to find where the short built up is happening and where would be the point where it could be around, where it could be reversing, because that will be the point where over here, okay, the open interest will be at the highest point, right? So eventually what will happen is that there will be a short covering rally, okay, which will push the open interest lower. And because then the prevailing trend would be up, eventually you will see long build up also happening, right? So in this phase, the stock could actually become something like this. No, it has come down, and this entire rally that you will see will be a short covering rally, and then there will be some bit of pullback and there will be long build up that may happen, and you can actually see a very, very big move in the medium to long term, right? So the higher the open interest, the more bigger the reversal could be from a medium term perspective. Okay. Sometimes in the short term, you will be caught up with the momentum, but in the medium to long term, it works out very well. And I will actually, show you with examples, how the things have played out. But your whole job is to find where there is a massive short built up, and the moment it starts short covering, okay, so it is not that you try to bottom fish, but the moment you see a trend reversal happening, that's where you need to catch it and try to trail it as much as you can through the trend following methods, and that will sort of help you to ride the entire trend from a medium to long term perspective. But because you are trying to catch it from a medium to long term perspective, that's where the trailing levels that you might have to keep could be a little deeper as well, right? So it could be maybe a 20-week or a weekly swing low or something. So that's where it will sort of help you to benefit and try to help you ride the long term trend. So coming back to the point, so we were at Concor, right? So in Concor, what is happening now is that there was a short built up. Okay. There was a short built up over here. This rally came due to short covering. Okay. And at this point, the open interest was low enough, like over here as well. When this shorting happened, again, there was a slightly surge in open interest. Then again, this up move was due to short covering. And at this point, when the open interest was low, okay, people thought, people might have got bullish on the stock and they actually built the long position. So that's what you see over here, right? So up till this point, if I do the vertical line, you would see that the open interest was over here. Now this fall has happened again due to a surge of open interest. So now over here, actually it is a tug of war between the bulls and the bears. Okay, because what I see from the data is that somewhere over here people have started building long positions. Okay, so wait, let me clear it. So at this point, basically people have created long position, right? This part. And from year to year in the decline, people have formed short position. Now there is sort of a confusion in the market, like which way the stock will go. Okay. So what I simply do is that I go on the charts Okay, and I try to see what the trend is. So from a short-term perspective, I can see that the 40-day exponential is broken, and that is, you know, sort of significant correction that the stock has seen. Okay, and sustaining below the 40-day exponential average, we believe, is never good, because that's where the stock becomes vulnerable for a correction, right? But on the weekly chart, when we see, the stock is still above the 20-week average, and it is still above the previous high that it has broken, right? So that is interesting. But over here, what we can see, that there is a bearish crossover, which RMI has shown, and in fact, it has broken this low on a closing basis, right? So what we see, the chart over here is actually candlestick, and we might think that the breakdown has not happened. But when we see the line chart, it has broken below the previous low, and that's why the trend has turned down. So we tried to understand, that there was a tug of war between the bulls and the bears, right? Through the open interest part. So over here now, if we go by the trend following methods and all, then bears actually have an upper hand. And I would suspect that if the 20-week breaks, okay, which is still, a little distance away. I think the price right now is, say, 828, and the 20-week is at 780. So because, these are, moving average is dynamic. So probably next week it might inch up a little higher. But then if the 20-week breaks, then it may not be good for the stock, especially from a trend following perspective. And that's where, we are seeing this huge surge in open interest that we have seen recently. So in this, what may end up happening is that bears will actually have an upper hand, and the people who form long position from year to year, they might have to cover their long positions, and that's where, probably stock can see a furthermore decline, right? So that's how, you can actually interpret it. So basically, the rollover screen will help you to understand what the bird's eye view is. Okay, but what you will have to do is that you will have to go on the OI analysis part, or in the futures OI interpretation part, and see how the actual trend is playing out on a day-on-day basis. Okay, and which is the position where people are maximum long, and which is the position at which, the longs may capitulate, and they may have to go for a short covering. And they will have to cover their position. Now, I was telling you that I had seen a similar sort of example. So a similar sort of example, was in the Hind Petro, which is HPCL. Okay, so over here, I will mark it so that, you'll be able to relate better. So at this point, people had, so basically the open interest was lowest over here, right? So this was the point where people had built up some longs, okay, from this point to this point. And when it peaked over here, again the open interest was very high, and this decline, so this was uptrend, okay. And over here, when we had this bottom, okay, when we had this bottom, so over here as well, again the open interest had surged a lot, right? And this was downtrend. Okay, so over here, eventually what happened was that there was a tug of war between the bulls and the bears. Eventually, when there was a breakout above the previous high, okay, and for that you will see what was the open interest at the breakout point. So that was somewhere over here. Okay, at this point, the open interest was at its highest, and in fact, even in the rally which we saw from year to year, there were few people who had built up long position as well, right? So again, this was up. So now what had happened was that there was a tug of war between the bulls and the bears, and eventually the stock rallied, and the open interest came down. Okay, which means that people who would have shorted over here, they were they were forced to cut the short positions, and that's what eventually led to a rally on the upside. And you're seeing now a decline in the open interest, right? Now you would say that what would happen at this point of time, given that the open interest has come down significantly. So firstly, I would expect that the open interest would eventually normalize and maybe, come down to this point, which means that there could probably be, furthermore short covering rally, or maybe even longs which are there, they may want to unwind, and it will sort of come to a normalized level. And from there, whichever way the trend picks up. Okay. So as of now, like I said, a major part of the short covering rally has played out, right? So the cream of this move has sort of played out. Now it would be more of a struggling kind of move, like, there will be ups and downs. And so now the next real opportunity would occur when the open interest is at the lowest point, and then, you need to understand what the trend is saying that, correct? Now, one more interesting example which I had seen was Nalco. Okay, so you can see over here, Nalco used to have, say, 5 crore open interest, 4 crore, 4 crore, 490, 4 crore, 490, 460, and so on, right? But it was only from, say, month of October where the open interest surged. But in fact, even in Jan, it again came back to normal. And now, in the start of the Feb expiry, it is opening with a 77% higher open interest. Okay. And this, by any means, last 12 months, if you see, this is the highest open interest. So the best way what to do is that look at the chart. Okay. And look at it, what it is saying. So you can see that the open interest was lowest at this point. Okay. Probably over here. And majorly, I would suspect that what has happened is, this rally has been majorly on the back of long built up. So there was, some sort of covering as well that we had seen. But more or less, if we see trend wise, open interest has gone up. The prices have gone up. So I would imagine that there would be a long built up, right? Now, what I do is that I try and see what is actually happening on a lower time frame. Okay, which means that at this point of time, basically the open interest had become very low. Okay, and we have seen a rise in open interest, and we have seen a rise in the up move as well. Now, trend wise also, if we see, it is trying to break out past the previous high. Okay, but it could also be a sign that this is divergence. But so far, there has been nothing for us to prove that, there is a trend reversal that is happening. In fact, we actually don't have a data, prior to 2010. But if you see that, and we will also probably try to bring in as well, but if you see that the stock is actually now at a major resistance level as well, right? Because if we see the chart, broadly, if I have to see, then so this is sort of the resistance zone for Nalco, right? Which it may or may not break out. So now over here, the major question, or the major thing that one needs to watch out for, is that at the start of new expiry, how does things play out? And for me, basically the previous low would sort of be the reversal point. Now I know, you may say that, 122 to bahut bada ho gaya, but it is, sort of at that make or break level. So if it basically, close and sustains above that, and in fact the higher open interest also keeps sustaining, then what may end up happening is that, you will have those high open interest surges. Then at the end of expiry, some weak hands will probably cover the position. I mean, some weak hand as in people who would have been long, they would say कि बहुत ज़्यादा हो गया, we have earned good profit, let's book out. So in that case, open interest will come down. Then again, the prices will surge higher and the open interest will surge higher. And that way, it will try and start sustaining at higher levels of open interest. And that would mean that people are now interested in this stock and they are willing to hold on to the long position, right? So, so that is where, you need to have an idea like when to be contrary and when to be in the trend following camp. Okay. So at this point, like I said, Nalco is at a major point. And basically what we then need to see is that firstly, you can see on the lower time frame that the 40-day exponential is not breaking, okay, which according to us is actually a good sign for the stock. But the moment the low breaks and the 40-day exponential breaks, that will be the point where possibly I would expect a reversal, right? And in this case, the reversal may just not be a normal routine correction, but it could be a little more significant. The reason why I say that is because the open interest is a lot, right? So in fact, if you see for Nalco in that way, okay, from year to year, basically, I think till this point, somewhere around this point or so, people have made money by making long positions. Okay. In fact, the correction that we saw was majorly due to people long unwinding. So in this case, as of now, we are not seeing people building shorts. So there are some periodical short positions, like a little bit of short positions, which people did try to take, somewhere over here. Basically, if there was a decline over here, there was a surge in open interest over here, right? So those were all small, surges that we kept seeing, but eventually, it moved higher and there was a short covering rally. Then again, in this correction, there was some surge in open interest, but again, in this consolidation and in this up move, the open interest kept going lower. Then it was around this point, somewhere around this point where the long again started building up. So at the max, what you may end up again seeing is that if the low breaks, then there will be a correction, maybe, not to that extent, or maybe somewhere over here, and you will see again open interest coming down. But if you see the stock breaking out from this entire bigger consolidation, okay, and sustaining at higher levels in terms of price action as well as in terms of open interest. So that will be a sign that people are very much now interested in this stock, and this stock can probably have legs on the upside. Okay. Now there is one variation which I would want to show you, and that is, like I said, HDFC Bank, if you see it, is at the highest point, right, in its lifetime. I mean, since the data that we have from 2012. So again, by that logic, people may say कि अरे open interest बहुत high है, that means अभी eventually तो it should rise higher. But even if you see the the prior webinar that we did, so actually what happened in HDFC was there was a surge in open interest in this decline, okay, which was somewhere over here. Then this entire rally was based on the short covering rally, okay. Eventually, when the open interest became low, okay, people were sort of neutral on the stock. And once again, when the prices went lower and the open interest started surging, that means again, the shorts are starting to build up. So this is what I said can happen if the stock is turning into a bigger if a bigger downtrend could be following, because you may see some sort of this pattern. So that is why, you don't know what the highest point could be. What we are seeing right now is say 1.93 million. That is, around that point. It can even surge to, 250 million or 350 million or something, right? You don't know that point. Now, the reason why I say that is because I had seen something very similar in Sun Pharma. When you see Sun Pharma and when you look at the historical data, okay, so by historical, I mean the entire that 12 years ka data. So see over here also what happened was that, in this phase, basically from here, it corrected. Okay, there was a huge short covering rally that we saw. Okay, again in this decline, there was a surge in open interest. Again in the pullback, some shorts were cut. And again, in this decline, there was a surge in open interest. Eventually, this was the point where the open interest got towards the maximum point. But like I said, you will not come to know like what is the highest point. You may think that this is the highest point, right? Maybe you will be right in the interim. But so obviously, from a short to medium term perspective, this would help a trader. But from a long term perspective, especially people who want to buy at the panic, this would have not been a appropriate time for the stock. So that's where, like I said, trend analysis and all is important. And somewhere I understand that long term people are hesitant to keep a reversal level or so, but I would say that sometimes it's necessary, because even from this point, from 585, it went all the way to 300 sort of levels, right? And that was a significant correction. But like I mentioned earlier, your entire job is to find out where the maximum short positions are, okay, and where the open interest is at its highest. Now, generally at this point, okay, you will see that the company fundamentals are turning bad. There might be some allegations as well. This is sort of a template that you will see. When you see such things, okay, and historically, if the market has given that company a clean sheet, or you can say a clean run management, or some sort of that thing, then eventually what will happen is that you will see a very good short covering rally that will come by, and eventually there will be bouts of long built up as well in between that will further fuel the rally. And you can see from this point to here, basically all what we have seen is a short covering rally, and it is now, just trying to come back towards its normalized level, which it used to in the past. So there could also be a phase that, now you may end up seeing bouts of long built up that will further fuel the rally. Then there will be long unwinding and so on. Because one thing that people need to understand, that once a medium term or a long term trend starts, okay, so basically we had seen almost a 6-7 years of correction. So typically from such bigger corrections, if the stocks turn around, okay, so then that could be significant, and they won't stop in say 6 months or 1 year. It can go on. So definitely the pace will keep slowing down as time passes by, but the trend won't change, right? And you would see the stock inching higher, probably at a little slower pace, but your whole opportunity then would be to see where the long build-ups are happening. In fact, if I'm not wrong, this surge was actually due to a short built up, right? Which again got covered in this entire rally. So this is how it will happen. But so these are all mini shorts happening and mini shorts covering happening. Your bigger focus point should be to find such bigger shorts wherever they are building up. And once you figure out that, just patiently wait for the reversals to happen, because once that happens, you may actually end up seeing a very, very big move, and that could probably be a medium to long term bottom as well. So I frankly have been using open interest from that perspective, because majorly like I follow Elliott wave. So in that sense, when open interest is at the highest, and if the Elliott wave counts are telling us that some major correction has been completing, then it is like sort of a very good time to see if this could be a good medium to long term reversal or no. And once that happens, you patiently have to wait and ride out the whole trend. So this is where open interest will become very helpful, because such high surge in open interest, you will typically, I can bet on this, that any stock where you will see a record sort of levels would only be due to panic selling. Okay, because it's when sellers, there is more greed, because they think that they can make money fast by by selling, because usually the declines are very sharp, right? So at some point of time, because of the herd mentality, everyone would be shorting, and at some point the open interest would become so high that it is bound to reverse. And once that happens, the first move from the short covering rally that you will see will be very strong. Okay, so maybe you might get a chance to enter somewhere over here when the averages and all will break, but it would be worth the wait, because you wouldn't want to fall in that prey of being in a false breakout. So that is an art that you may have to learn looking at the various time frames. But I am very sure that whatever methodology or the trading process that you all follow, you will be easily able to integrate open interest in that. And that will sort of help you to gauge how the market mood is for that particular stock, right? So yeah, so majorly, I mean, that was it from my side. uh, Probably I think there will be a lot of questions that people may have, and while we address that, I feel that many more questions will be resolved.
Okay, thanks, Jay. And those who are having doubts, please raise your hands, and one by one, we'll allow you to unmute. You can ask your doubts. Please raise your hands. Okay, Ravi Kumar.
Thank you, Chavan. Jay, this was fantastic. It really opened my eyes, the way to use the rollover data and open interest. One is like, just on the chart itself, or rather the tool itself, sometimes it gives me trouble. For example, right now, I'm not able to get that how to use the striker. That information is not coming up now.
So all you have to do is that, I mean, I'll just help you, navigate. So once I open the web.strike.money, right?
Yes.
I'm on the dashboard.
Yeah.
I hover on the second, this icon.
Okay. Okay.
I go in futures.
Okay.
And I type OI interpretation.
Okay.
And I click on OI print. Or else you can also type over here futures.
Okay.
In the tools.
Okay.
You come to this point. Okay. Basically, you will come to this point.
Okay.
And then over here, you can go to OI interpretation, and you will be able to understand.
Okay.
And in fact, on the left hand side, the third one, how to use strike, is there. The bottom. Yeah.
Oh, okay.
Yeah, how to use strike platform.
Oh, it's here now. It is not,
Yes.
When I clicked on the, when I entered.
It is only for the first time it will appear, how to use strike platform. Once you have seen the video, it will disappear. So right now we have put it over here. You can just go through this video. And in fact, Jay, you explained about RMI, right? So people are asking, where is RMI? Okay. So what you can do is you can go to the help section over here at the top. Okay. Help section over here, and just open the scanners. And here the RMI indicator is over here. Just go through this video to understand how to use the RMI. Jay explained as to how he combines open interest and sees the trend, and how he sees the RMI. That is the Rohit momentum indicator. So you can just view the video here. We'll take one special session on RMI probably next month. So yeah.
Okay, great. Thank you, Chavan. Jay, one more question.
Yes.
In the scanner section, there is a Dow scanner. right?
Correct.
Yeah.
And there, if I choose daily down, right, does it mean that now the Dow theory is violated? Is that what it
No,
is?
no, no, no. So all when you're selecting down, it means you're telling the system that show me only the sorry, this is Dow trend scanner, right? So you're telling the system that show me only the stocks which are down.
Which are down, okay.
If you're doing down to up, up to down, that means you're telling the system that show me the stock or the sector which are giving fresh signals on the downside.
Okay, that means this is where the Dow theory is probably violated. Is that what it is?
So basically, in this case, what you are seeing is that if I do it, up to down, that means there was an uptrend, okay?
Yep.
But then the low has been broken on a closing basis, and that's why the system is telling you that, on the daily chart, it is turning down.
Okay, got it.
So you can actually play around anyway, like, see, I'll show you one of the way. So if you are bearish on the market, right? And
Yeah.
if you want to try and see, okay, which are the FNO stocks which are weak, right?
Yeah.
So what I do is that I'll tell my system that show me the stocks which are on the monthly time frame down, or they are turning up to down. Okay.
Okay.
That means the higher time frame is either down, or they are turning, or they are turning down after an uptrend.
Okay.
And I will say a similar filter for weekly as well, down, and show me the stocks which are which are turning down as well, right? So
Okay.
now over here, what I get is a list of stocks on a higher time frame which are either down or they are turning down, right?
Okay.
And on the daily chart, I would tell the system, like, show me the stocks only within this basket which is turning down.
Okay. Up and
Understood?
down is just fresh breakdown.
Fresh breakdown. So that is what the system will then throw you. So that is also one way of scanning your stocks and trying to find out quickly which are the stocks that you need to focus.
Got it.
Or else you can also see which are the down one, okay? And then maybe on the hourly you will want to say, okay, throw me the stocks which are turning from which are turning down from up. Now, if you don't see any result, that means that probably we don't have anything to show on this front.
Okay.
Okay. So that is how you can probably filter and try to find the focus list.
Perfect.
Okay. Thank you, Ravi. Okay, next up is Roshan. Roshan, you can unmute, please. Yeah, Roshan.
Hi Jay, it was a really great session.
Thank you.
It really cleared my doubt on OI. Now I have the question from me is, does this OI theory also works on index? Since I trade a lot in Bank Nifty and Nifty, as well as mid cap Nifty, etc. So will they also work on Bank Nifty?
Yes, it works out very well. In fact, if you follow the strike handle, we had given out this observation as well, where this was the range in which Bank Nifty was trading at, right? And we had seen this open interest surge.
Correct.
And that
The price
eventually
is down.
led to some correction. So typically when you see the Bank Nifty, and I don't know why, but lately, this has been happening a lot, that you're getting those bout of spikes. You're seeing those spikes, quicker spikes. So what happens is that, see, over here, there was a break in open interest. Breakout in open interest, and then you saw a sharp decline, and it came to a point where the open interest was very high, and then we saw a short covering rally, right? Something very similar happened over here. So a breakout happened over here, and here there was a surge in open interest, and then eventually in this rally, the entire shorts got covered, and it saw a good short covering rally.
So
Now,
basically this is more on a monthly time frame or a shorter time frame?
So I see, frankly, I have built this habit of looking at from a medium term perspective. Okay.
Okay.
For a short term trader, this would be useful, where he sees a breakout over here. Okay. And tries to capture that 100, 200 points move that that the index is going to see.
Okay.
Okay, so basically he will try to capture this, because see, this was the point where there was this open interest breakout, right? And I believe it would be somewhere. Wait, let me put the horizontal line. So it was, say, somewhere over here, right? So it was on this low. I mean, somewhere around here, basically, where there was a surge in open interest, right? So see, that is how, a short-term momentum trader can use. But what I typically try to look at is that from a medium-term perspective. And when the open interest itself was down and it was increasing, that was one of the cue that, things could be turning around. Because see, I honestly try and I combine technicals with derivatives. Okay. So this was actually a big rising wedge pattern which the bank Nifty was following, right? And at this point, the open interest was low. And when there was a surge that was happening in the open interest, because somewhere over here, I know that bank Nifty had seen, say, 20% or something open interest. Wait, I'll show you in the data. So it was prior. So this high was formed at this high was formed on 1st of Jan, right? Somewhere over here. So you can see, see, this was the point where there was a 20% short built up. That was on 8th. 8th was when over here, this decline. Okay. So because I mentioned that it was a wedge over here, okay. So we were at the upper end of the wedge and the open interest was very low, and then it was starting to take a direction. Okay. So this was actually the early indication that, something could happen.
Okay.
And then this was the confirmation point. So I tried to, find out somewhere over here only, because that sort of helps me to take a medium term view on this. And then eventually a short term trader can actually use it as a breakout of this and try to ride the momentum. For me, it could be a little more waiting game. But that is how, you can adjust to your time horizon. In fact, if you're a medium to long term investor, okay, then probably if the bank Nifty comes somewhere over here and you end up seeing a case of a reversal, then you may actually want to go long into that and be a contrary.
Correct.
So basically different people can use it to their time horizons.
All right. And one more question, is this OI indicator available at TradingView also, or is it available only on Strike?
No, it's only available on Strike. So we actually have built it over here.
No issues.
Okay.
Thank you.
Yeah. Jay, before going forward, can you just do the rollover analysis on index Nifty and Bank Nifty, please?
Yeah. So like I showed you in the Bank Nifty, I mean, the open interest, the early positioning open interest actually is very high. I think that was 4th or 5th in the list. So it was somewhere over here, right? You can see, sorry, the rollover analysis early positioning. So you can see over here in Bank Nifty. Okay. So there was, I mean, normally it used to be 28 lakh. Then over here it had come to 23, 24 lakh. And now it has become 36. Okay. So that is like a second highest reading after April 23. But in this case, like I said, that Bank Nifty is probably breaking down, and there is it is making lower low. So this high open interest that we are seeing in the Bank Nifty index may not necessarily end up becoming a bottom, but you need to wait basically for the reversal, right? The other thing that sort of little worries me as well is the is the rising wedge pattern, which in Elliott wave terms we call it as an ending diagonal pattern. So I would not be rushing into it to think that ke bottom ho gaya and I would want to buy. I will give it some time and I will want to wait for a reversal to see. Okay. When we come to the Nifty, Nifty, I frankly did not see over here. So over here, actually the open interest that we are seeing is slightly on the higher side. So wait, let me see the Nifty chart. So see over here, what we are seeing is that from this point to this point, okay, largely there was a good amount of long built up that had happened, right? And what you are seeing over here is actually a divergence, which means that in this new high, people did not really, ended up taking their long position. And now, as the decline is starting, okay, which means if I do it from this point, you can see that a slight surge of open interest seems to be happening, right? So I would imagine that many of the people, who have gone long over here, they have possibly covered their long positions. Okay. But, there might still be few that would still be left. So then I would think that, maybe this level, or if you see technically, Nifty 50. So if you see the chart over here, this is something that, we have highlighted basically on our Indiacharts account, where we do try to, predict the movement of the index. So there we had highlighted that the blue line, which is the 40-day exponential average, that has not been breaking for the past 2 days. Okay. So I think that if there is a break in the 40-day exponential average, okay, and the band starts to widen, that's where the Nifty index could be in trouble, because on the daily already there was a new sell that triggered, a few days back. And in fact, when you see the weekly chart over here as well, so over here as well, we are almost over there in terms of trend. It has already changed because it had broken this low, right? Now the RMI bearish crossover that needs to further confirm, and I would imagine that 40-day exponential average, that plays a key role over here. If that breaks on the downside, then I would imagine that the future built up that you are starting to see over here, which is probably a short built up, that may continue. And in fact, many of the people who have formed long positions somewhere over here, which are not fully covered yet, even that may normalize, and that can further get the Nifty index a bit lower as well in the days to come. But yes, I would say that until this low is not breaking, there is a possibility that there could be, some time wasting part over here. Or if the up move does happen and the open interest starts building higher, then these shorts would be at a risk, and I would watch very closely if they are starting to cover or no. So that is where we are right now. I mean, in the broader scheme of things, this low and this high becomes very important. And there is sort of like a mini tug of war that is going on, because the people who would have probably done long over here, they are still, I think, holding to the longs. And there are then few people who have shorted over here. So it is like a tug of war between people who have gone long over here and who have gone short over here. And maybe I would think that if the low is broken on a closing basis and Nifty sustains below that, then the people who are still long, they would be forced to cover their long positions.
Okay, Jay, just for case studies, okay, last month on the strike handle, you posted your analysis, you and Shivam posted your analysis on OFSS, right? And after that, what happened was absolutely fantastic, 40% from there.
Yeah.
It's not just dumping, but just to understand what went through, how did you do that analysis? If you can share your views, please.
Yeah.
If you can follow our strike handle, strike_IC on Twitter, we keep posting this analysis, and you can definitely follow there.
Yeah.
Whoever is there. Are you on Twitter? Sorry, Jay, can you open your Twitter account here on the desktop? Is it possible?
Yeah.
And show them the. Yeah. We'll be posting our analysis over here very frequently. So you can just follow strike_IC.
We'll have to search a bit
And
for
just
that.
go to that, if it is possible, go to that.
Yeah. See, like we do keep posting all our important observations, like say Nifty 500, the breadth is turning negative for the first time, which means that this is nothing but the net new 1 month high. That seems to be getting into the negative territory for the first time. And if you want to understand sentiment indicators in detail, so in the help section, in the sentiments, we have explained all the important sentiment indicators that we have put out, which in strike you will get it in analyze sentiment indicators, and that's where you will get all the sentiment indicators, right? So yeah, I think OFSS. So see, this was on the bank Nifty part, where we had highlighted that the open interest seems to be surging, and you can see in the past 2-3 days the open interest has shot up. So probably you can follow the strike handle for such interesting updates. OFSS. Yeah, I think it was around this point on 12th of Jan, when basically this price was breaking out and the open interest was, sort of breaking out as well. So it was, I think, sorry, somewhere. So again, over here, what happened was that on 12th of November, 12th of Jan, right? Somewhere around this point. So stock was sort of breaking out from its previous high, okay? And we had actually seen a surge in open interest over here, okay? After open interest being very low, there was a surge in open interest, and then when the price action eventually broke out, so probably, somewhere at this point, the people, the insiders, I would say, they would have probably known that the open interest, the results of OFSS might come good. And that's where they had positioned themselves. Okay. And that's where eventually there was an open interest breakout as well that we saw over here, which was nothing but a breakout over here, sort of a mini breakout over here. And then when this was eventually confirmed by price action also breaking out, and that's what led to a good surge in open interest.
Yeah, in fact, on the same day, even it was a very good volumes, I suppose.
Yeah. So one more thing, I had explained this in earlier, so you can also try and combine volume and everything as well, okay, to your analysis. So that's where, here we had got a volume delivery breakout as well, as you can see over here.
Absolutely fantastic. So okay, next up is Mr. Praveen Jain. Praveen, you can please unmute.
Hello.
Yes.
Yeah. Is it audible?
Yes,
Yeah,
absolutely,
Yeah.
Praveen.
Jay, I just wanted to ask a chart regarding Bajaj Auto. The interpretation of yours for this chart. The price is making higher highs, but there is no um, on the OI and also on the rollover thing.
see, so over here, frankly, as of now, the first look what I can actually see is that you simply draw the vertical lines, okay, so that it becomes very clear. See, over here there was a long built up. Then in this correction, there was covering by people, okay, and then again now there is a slight surge in open interest, okay, which means this is actually that case where we see surge in open interest, then the weak hand sort of lose confidence and they cover their position, and that sort of leads to some sideways consolidation or a pullback, and then again there is a surge in open interest, as you can see over here, which is basically due to long built up, then again it goes through a phase of consolidation. So this is what basically, like I was telling for Nalco, where it has come to a critical point. And if it starts sustaining higher open interest, then this is what you will keep seeing happening from time to time. So a surge in open interest, then a pullback, which will lead to long unwinding. Then again, when the open interest comes down, and the prices rise higher, they will again form long positions, and these all things will go on to a point where at some point, what will happen is that Bajaj Auto would be at the highest point. So the open interest will either be very high, or there would be a high open interest at this peak, but a very, very low open interest at the second peak. So again, you might be in that impression कि ये वापस open interest ऊपर जाके, it might come back towards the previous high. But at this point, when the low breaks or the key moving averages will break, that's where I'll be very careful, because I'm very sure this stock might have not even broken the 40-day exponential average. So that's where, I come to this chart. I go to Rohit momentum, Rohit setup, and I would see the chart over here. And you can see that from this point, the 40-day exponential was not breaking, right? In fact, the 20-day exponential is also not breaking. So when the 20-day exponential breaks, that will probably be the first point where I will start thinking that is the trend over, and what the open interest is sort of telling me. But until this doesn't happen, I would imagine that you will keep seeing long built up, long unwinding, long built up, long unwinding, and the stock may periodically go through an up move and then a corrective phase, up move, corrective phase, and so on. I hope that answers your question.
Okay. Okay. Next up is Naresh. You can unmute, please.
Yeah, good morning. Good morning, Jay. Good morning, everyone.
Good morning.
My query is with regards to the stock going in the ban period, like Nalco. Very frequently it goes into the ban period. And how do you correlate OI with that?
So what will happen is that in ban period, actually the open interest will keep coming down, right? Because people will be forced to square up the position. So at that point of time, if the prices are holding up, okay, and the open interest is going down. So the next you will see is that when the open interest is going down, is the price surging as well. Because like I said, it will be that case only, that there will be long built up, then long unwinding, again a long built up, long unwinding. If it has to do that longer term breakout.
Okay. Thank you.
Yeah. Thank you.
Okay. Next up is Aldrin Gomez. You can unmute, please. Aldrin? Oh, you're not audible, Aldrin. Okay. Next up is Srinivas Murthy.
Hi Jay, good morning.
Srinivas, hi, good morning. Just 1 minute. Chavan, if you can just tell them what is the Twitter handle. I mean, I'm getting the messages for that.
Okay.
Hey Jay,
Hi,
can you hear me?
sorry. Yeah, good morning.
Hey, if you look at Bank of Baroda on monthly, right, we are completing the ending diagonal. How do you combine with your rollover plus current Y now in that case?
Bank of Baroda.
Yeah. If you look at Bank of Baroda, it's an ending diagonal.
Where is the ending diagonal?
In a monthly chart.
Actually, you're telling this.
In a monthly, yes.
Yeah. I mean, yeah, this would be the one
Correct. Yes, correct.
Okay.
Yeah.
So over here, if we see shorts are happening, see over here, short happened, then this entire move was actually triggered by a short covering rally, right? If I see over here, wait, let me check the near-term data. I think on this big red candle, there was a surge in open interest. So it is a short built up over here and a long built up on the very next day. And that has led to the surge in open interest. Wait, let me look at it from a historic perspective as well. Where is it? So this was the long. So yes, Srinivas, I think that this wedge pattern that you're showing me, that could be significant. And, right now, we are not seeing those spike in the open interest as of now. Okay. But I would think that if see this short build up which had happened, and if the high is not broken, right? So then I would think that maybe it can come lower. So let us also do the trend analysis of that. And for that, I'll go to charts, Rohit setup. And see over here, what I see is that the 40-day exponential is not broken till yet, right? So I think this would be the first point where the weakness can creep in if you see the breaking of the lows and Bank of Baroda sustaining below that. Then when I look at the weekly chart, so basically the weekly chart is still strong. And so yes, so what I would honestly think is that if this low is broken and Bank of Baroda sustains below that, then I would imagine that the 20-week exponential average can be tested, which is possibly 213 or something like that. And if that then closes, then furthermore decline can happen. But in all this process, okay, ideally when the low breaks, there should be a start in, so I mean there should be this open interest surge as well. So see, it could happen that over here as well we had seen a long built up. So maybe at the first decline you will probably see open interest coming down because these people might be covering. But then eventually when the trend picks up, the open interest should also start picking up. And that would sort of tell you with some degree of confidence that people are building into the shorts and there could be a lot more room on the upside. And basically what we are seeing in the form of wedge, that would actually be true. And it could probably even indicate, a medium term reversal as well. So it is, so to summarize, it is at a very, important stage right now. Probably a break of the 40-day exponential average and sustaining below that, and the break of the 20-day average. If these two things happen in, say, coming week, then I'll be very careful on this one. And I would think that maybe a short covering, maybe a shorting can come in the stock.
Thanks, Jay.
Yeah, welcome.
Monthly, how do you look monthly rollover for this specific stock?
So you would
There is no monthly
see,
rollover.
no. So you will definitely see that, but I would imagine it is not something great because it did not come in the first 10 or 15. Bank of Baroda. So you can see that over here, the average is say somewhere over 10 crore, 8 crore, 9 crore, 12, 11, 12. So nothing very significant. So yes, I mean, there has been this 30% surge, but when you see from a historical perspective, it is not like a very, very huge surge.
Okay.
You know, say if this would have been 40 crore or something like that, you know, then that would have been huge. But this more or less seems to be like, you know, around its average only, previous average.
How do you reach here, Jay, to look all the open interest in one time? I couldn't get this futures, only futures. You're not specifically picking anything.
No,
from
sorry,
the chart.
I did not get this question.
So you have it in a screen, right? Where you are in a screen, right? How do you reach here?
Okay, so
Normally,
yeah, so for your row of futures, OI interpretation.
Okay.
Sorry, rollover.
Okay, fine.
Rollover.
Rollovers, okay.
Yeah, and once you come over here, you come to early positioning. So basically, the expiry tab and the early positioning tab, these get updated only expiry to expiry. Okay. The daily rollover is the one where you will keep getting the rollover data every day.
Okay. Okay.
Okay.
Thanks, Jay.
Yeah. Welcome.
Thank you.
Mihir, you can unmute and you can ask your question. Mihir Goyal.
Yeah. So thanks, Jay, for the session. It is very great, and last session was also very good. Means it is very helpful. Between this last session and this session, I avoided some of the pitfalls because of the previous session. And this tool is also very great. Means it is very helpful, and it is means I can interpret things very fast. So that's great.
Thank you.
Thanks for that, and thanks for the team also, Strike team. And yeah, so my I have one thing is that my request is that are we planning to integrate USD INR in future in this strike, or we are not going to currency at all?
Probably not a near-term plan because that is currency and that is a different segment altogether.
Yeah. So right now we are looking at integrating BSE and commodities going forward, and then somewhere down the line we'll think about currency. But right now our focus is on NSE and adding. Right now NSE data is added. Our focus is adding on the BSE data and also commodity.
Okay.
Right now, yeah, currency is not in the plan as of now, but we'll see later on. Yeah.
Sure.
Yeah.
Yeah, and two stocks which I want you to look into early positions. One is the GAIL and other is REC. My interpretation is that it's means big hands are cashing it out because I can see the divergence. Means price is going up a lot, but open interest is not increasing; it is decreasing. So, but you can confirm me whether I'm thinking in the right direction or.
So for GAIL specifically, I would sort of have a slightly different opinion because we have seen this multi-year breakout, right? And when you actually see its long-term chart, okay, when you see this long-term chart, and what you see over here is that this was like in terms of price action, this was a very big hurdle, right? And this hurdle was actually broken with the surge of open interest. Okay, so basically, if I go to GAIL over here now, and if I see the open interest, okay, so it was this point when this breakout occurred. It surged on the higher open interest, and higher open interest is sustaining. Okay, so periodically, see what I honestly feel is that there could be some pullback. Okay, and in that the people who are long, the weak hands may get out of that. but because it is a long-term breakout and the OI is sustaining at the higher level, so you might end up seeing, something like this, and the prices may keep rising higher, is what I feel. Now, the reason to that also is, I mean, if you recall our previous, webinar where the Nifty PSU index, PSE index, sorry, not the Nifty, but the BSE one, because BSE one has, more data. So if there is like, you can say that if there is, say 12, 13, 14, 15 years of a breakout in the index, I would imagine that it will not end up in, say 6 months or 1 year. So surely, because the, PSU index has doubled or, sort of has been in crazy move, right? Since past few months, there is a possibility that there can be a correction. You can either see a time-wise correction or there could be a sharp correction as well. But I would imagine that eventually it will rise higher. Okay. So if that is the case, and GAIL is seeing that multi-year breakout, okay, and the open interest is sustaining at higher levels, so at some point, I would think that, there could be some consolidation because, even the PSU index may go for a consolidation, but eventually it should be headed for much higher levels. And the reason which also sort of supports, and, like I said, we do the Elliott wave analysis, right? And when we see the quarterly RMI, okay, quarterly RMI, whenever it gets into the bullish mode, I mean, it does not, sort of stop in a very near term. And especially not just that stock as a 1x hua, I mean, stock has doubled and that falters. Usually, I would imagine that, it would see a good surge. Now, your point on REC is definitely right. Okay, where, see, in this is a different case altogether because the stock has already become 5x, right? GAIL has not become 5x. So that's where even over there, the higher open interest, that I feel may sustain. But when we look at REC, so I would, totally echo that point that you can see that over year, there was a very high open interest and then, it has gone down. But when you look at the chart, okay, and if you are doing the trend following method, REC,
LTD.
see on the daily chart now, it is not even breaking that blue line. So this would be the first thinking point. Okay, is the trend reversing? But until that doesn't reverse, I would be aware कि यहाँ पर distribution हो रहा है, like all the strong hands are cashing out. I would totally agree to that point. But in terms of price action, I am still not seeing the reversal at this point of time. It is only when the blue line breaks, because blue line is not breaking since April of 2023. Once that breaks, then I would be very careful and I would think that, this low open interest that we are seeing, maybe it may happen that the prices go down and the open interest starts surging higher.
Okay.
But this is definitely, your observation on this is correct, but it may just not be the right time to, be very pessimistic right now. It's only when you see the trend reversal, you go for it, because see, it may happen कि वो 480 वाले का 420 में ही confirmation आएगा, but that 420 may end up also becoming 310 or something like that, and that will be the real cream. In this, there will be a lot of struggle. I mean, you may get some up down moves. Probably once you get the reversal, the moves will be a lot more cleaner and you will be a lot more peaceful in that phase.
Okay, sure. Yeah.
Okay.
Yeah.
Next up is Shankar Roy.
Good morning, Joy.
मॉर्निंग।
आपका जो कॉस्ट ऑफ कैरी जो इंडिकेटर है उसका इंटरप्रिटेशन थोड़ा आप दिखाएंगे तो अच्छा होगा।
ओके, सो कॉस्ट ऑफ कैरी ना का एकदम सिंपल मतलब है कि